Good morning, Mark Soderberg with ADM Investor Services with your morning ag market outlook for Tuesday, January 14th. Well, mostly lower trade across the ag space overnight as prices do give back a little bit of yesterday's gains. Right now, corn is actually recovering, only down 1 to 2 right now. Wheat has actually turned 1 to 2 better here in Chicago, still steady to about a penny lower in Kansas City and in Minneapolis. Bean futures, bean complex also down 1 to 3 in the beans, however, closer to session highs. Meal is down about $2, while bean oil is down about 10 to 15 points. Yesterday afternoon, CFTC report showed speculative traders were net buyers across the ag space in the week ended Tuesday, January the 7th. In corn, money managers bought nearly 25,000 contracts. This extended their long position to just over 253,000. With heavy buying the past 3 sessions, we believe this long position now has swelled to nearly 310,000 contracts. And if that is realized, then that would be the largest long position in nearly 3 years. Open interest continues to surge, up another 53,000 contracts with yesterday's trade. In beans, money managers, they bought nearly 14,000 contracts last week, and with heavy buying here the last 3 sessions, we believe they have now flipped this net position now to net long for the first time since December of 2023, just over a year now. Speculative traders do remain short meal and oil, and their short position in wheat remains historically pretty large. It's still over 80,000 contracts. Hot, dry weather will continue for at least a few more days across central Argentina and into southern Brazil. High temperatures in the upper 90s and in several locations over 100 degrees. Soil moisture is quickly being depleted, causing crop stress. Some relief is in store later this week in the form of scattered showers. However, overall coverage and totals are expected to be highly variable. Forecasts call for additional rains and cooler temperatures next week. The Buenos Aires Grain Exchange is expected to be out Thursday with crop updates from Argentina. With plantings essentially over, the focus will shift to crop ratings and production estimates. CONAB was out with their production estimates for in January for Brazilian crops. Essentially left unchanged, bean production up ever so slightly to 166.3 million metric tons versus USDA at 169. Most private estimates still coming in just over 170 million metric tons, despite the recent dryness in the Rio Grande do Sul in the Deep South. CONAB's corn estimate down slightly to 119.7, well below the USDA's 127. They did lower their wheat production forecast slightly to 7.9 million metric tons, down from 8.1 the previous month. The central and northern growing regions of Brazil are expected to start shifting into a bit of a drier pattern the second half of January, crucial if they are to harvest soybeans and start to plant their second corn crop in a timely manner. Inside trade for March corn overnight with a huge speculative long position. We now may be vulnerable to some profit taking at some point. However, we'll likely need to see improved weather conditions in South American first. Planting delays for Brazil's second corn crop, I think, would quickly drive prices back up over $5. Demand for U.S. corn should remain strong as we are the cheapest in the global marketplace, as Brazil continues to use more and more of their crop domestically for ethanol production. Beans did poke above its November high at 10.55 before pulling back here a little bit. In the short term, South American weather will drive price, whether we go back up or feel some pressure under the weight of the South American harvest. Inside trade in March oil. March meal did stop just shy of its 100-day moving average at 310.70. Wheat, quiet, a little bit of recovery here as we watch for results from Jordan's most recent 120,000 metric ton tender. Thanks for listening, everyone. Have a great day.